EPK Capital presents Deep Dive on Goldman Sachs. Hello everyone, welcome to EPK Capital's Deep Dive video. I am your AI host, Rutvik. In this series, we analyze one company each day based on the security analysis by Benjamin Graham. Today, we are going to talk about Morgan Stanley. When you think of Wall Street's elite, one name stands head and shoulders above the rest: Goldman Sachs. But here's the burning question. Is this investment banking titan still worth your investment dollars in 2025? Today, we're diving deep into the numbers, charts, and controversies surrounding ticker GS to uncover whether this financial giant can deliver those legendary returns or if it's time to walk away. From record-breaking profits to billion-dollar scandals, we're covering it all. The company and its promoters. Goldman Sachs isn't just any investment bank. It's the investment bank that has shaped global finance since 1869. With 46,500 employees worldwide and annual revenues of $52.16 billion, this New York-based powerhouse operates at the very heart of global capital markets. The firm is led by Chairman and CEO David Solomon, who's been steering the ship since 2018 after a meteoric rise through the ranks. Solomon, who famously moonlights as DJ D-Sol, has surrounded himself with a stellar management team, including President and COO John Waldron and CFO Dennis Coleman. The recent leadership shuffle in January 2025 saw the appointment of Matt McClure, Anthony Gutman, and Kim Posnett as global co-heads of investment banking, positioning the firm for the expected M&A boom ahead. What makes Goldman unique is its partnership culture. While it's publicly traded, it still operates with the mentality of an elite partnership where only the best of the best make it to the top. This isn't your typical corporate structure. It's a meritocracy where performance is everything. 10-year financial analysis. Let's crunch the numbers that really matter to investors. Goldman's financial performance over the past decade tells a fascinating story of resilience and adaptation. Revenue growth. Total revenues have shown remarkable stability, growing from around $30 billion in 2015 to $52.16 billion in 2024. That's a compound annual growth rate of approximately 6.3%. But here's what's interesting. Revenues have been somewhat volatile, ranging from a low of $34 billion in 2020 to peaks above $58 billion in 2021. Profitability. This is where Goldman truly shines. Net income surged to $14.3 billion in 2024, representing a stunning 77% increase from the previous year. The firm boasts an impressive net margin of 26.8%. That's exceptional for any financial services company. Return on equity stands at a solid 12.5%, though that's actually considered on the lower end for Goldman standards. Balance sheet strength. Goldman maintains a fortress balance sheet with total assets of $1.68 trillion and shareholders' equity of $122.4 billion. The firm's debt-to-equity management has been prudent, allowing them to weather multiple market cycles. What does this mean in simple terms? Goldman is like that high-performing athlete who might have ups and downs, but consistently delivers when it matters most. The firm's ability to generate substantial profits, even in challenging environments, demonstrates the strength of its diversified business model. Stock chart, technical analysis. From a technical perspective, Goldman Sachs stock is painting an intriguing picture. Currently trading around $795, the stock has been on an impressive run, but the charts are flashing some important signals. Support and resistance levels. Key resistance sits at $747.83, which technical analysts view as a critical breakout level. On the downside, support is found around $693.95, representing a potential stop-loss level for technical traders. RSI analysis. The 14-day relative strength index is currently reading 73.2, and here's the key point. That's in overbought territory above 70. This suggests the stock may be due for a pullback in the near term. Moving averages. The good news is that GS is trading above all its major moving averages. The 20-day, 50-day, and 200-day SMAs are all pointing upward, confirming the long-term bullish trend. The stock scores a perfect 10 out of 10 in technical ratings, with both short-term and long-term trends firmly in positive territory. MACD indicator. The MACD is showing a positive signal, though it's beginning to decline, suggesting momentum may be waning. Benjamin Graham valuation. For value investors following Benjamin Graham's time-tested principles, Goldman Sachs presents a complex valuation puzzle. Graham's approach focuses on finding stocks trading below their intrinsic value with a significant margin of safety. Using Graham's traditional metrics, Goldman faces some challenges. The legendary value investor preferred companies with consistent earnings growth, reasonable debt levels, and trading at low multiples. While Goldman certainly has the earnings power and balance sheet strength, the stock's current valuation multiples suggest it's not the classic cigar butt Graham would have loved. Graham's formula typically works best with companies that have steady, predictable earnings growth. Goldman's earnings, while substantial, are inherently cyclical and tied to market conditions, exactly the type of volatility Graham was wary of. At current prices, traditional Graham disciples would likely wait for a better entry point. Pros versus cons, bull versus bear case. The bull case, market leadership. Goldman maintains its position as the #1 global M&A advisor and dominates key investment banking segments. Earnings power. The firm delivered record profits in 2024 with a 77% earnings surge, demonstrating exceptional operational leverage. Strategic positioning. With anticipated deregulation and M&A boom under new administration, Goldman is perfectly positioned to capitalize. Diversified revenue. Strong performance across investment banking, trading, and asset management reduces dependency on any single business line. The bear case. Valuation concerns. RSI above 70 and high multiples suggest limited upside at current levels. Cyclical nature. Investment banking revenues are highly cyclical and vulnerable to market downturns. Intense competition. Faces stiff competition from JP Morgan Chase, Bank of America, and Morgan Stanley in all key business segments. Regulatory headwinds. Ongoing scrutiny and potential regulatory changes could impact profitability. Important checks, scandals, and global position. Goldman's track record isn't without blemishes. The firm has faced several high-profile controversies that investors need to understand. 1MDB scandal. Perhaps the most significant recent controversy involved the Malaysian Development Fund, 1MDB, where Goldman paid over $2.9 billion in global settlements. Former executives received prison sentences, and the scandal highlighted serious compliance failures. Gender discrimination settlement. In 2023, Goldman paid $215 million to settle claims of systematic discrimination against nearly 2,800 female employees, revealing cultural issues within the organization. Apple Card issues. The Consumer Financial Protection Bureau ordered Goldman and Apple to pay $89 million in 2024 for mishandling the Apple Card partnership, showing challenges in consumer banking expansion. Despite these controversies, Goldman maintains its position as a global financial powerhouse. Within the investment services industry, it holds an 11.62% market share, trailing only StoneX Group and Morgan Stanley. In the broader financial sector, Goldman commands a 4.43% market share, positioning it as the fifth largest player behind JP Morgan Chase, StoneX, Bank of America, and Citigroup. Conclusion. Goldman Sachs represents both the pinnacle of Wall Street excellence and the complexities of modern finance. The firm's exceptional earnings power, market-leading positions, and strategic advantages make it a compelling long-term investment thesis. However, current valuations appear stretched. Technical indicators suggest near-term caution, and ongoing regulatory challenges create headwinds. For growth investors betting on continued M&A activity and market strength, Goldman offers unparalleled exposure to Wall Street's profit engine. For value investors seeking Graham-style opportunities, current prices may require patience for a better entry point. The bottom line? Goldman Sachs remains a formidable financial institution with proven ability to generate substantial profits, but timing and valuation matter. This is a quality company that may require waiting for the right price. Remember, this analysis is purely educational and not financial advice. Always conduct thorough research, consider your risk tolerance, and consult with qualified financial professionals before making investment decisions. Market conditions can change rapidly, and past performance doesn't guarantee future results. If you found this deep dive valuable, don't forget to subscribe and hit that notification bell for more comprehensive stock analyses. Until next time, invest wisely and stay informed.